It can be difficult as a parent, depending on the situation with your children, because not everyone operates the same. And just speaking from my own experience with my daughter, there have definitely been times she was more receptive or less receptive to having conversations of that nature. And I will tell you that the way that I did it, and I guess I'm blessed that things seem to have worked out well. It seems some of the information caught on because she definitely has developed some healthy financial habits. But the whole time that I was wholesaling real estate, a lot of times she would ride in the car with me and she would go through the dirty, stinky houses with me. And I don't think she enjoyed it at the time. When we had our first rental property, before we started really hiring contractors and delegating all of the workflow, we were in the houses, myself, my buddy who was a partner in the business, our spouses. And I brought my daughter along. She was 4 years old, and we had her doing little things like fastening trim and whatnot. I don't think she necessarily enjoyed those things, but she got to see the journey as it occurred. And I tried to include her along the journey all the way.
Welcome to Spur Equity's Spur Your Wealth podcast, your ultimate guide to passive income through real estate investing. Join us as we together discover the secrets of building wealth one passive investment at a time.
From expert insights to inspiring success stories, this podcast will inspire you and empower you to take control of your family's financial future so you can live life on your own terms.
Hey everyone, welcome to another episode of Spur Equity's Spur Your Wealth podcast. We are your hosts today, Param Singh and Rav Singh from Spur Equity. So guys, you may notice I'm not in my regular podcast studio and station today. I'm actually sitting here with Rav, which is why I have my headphones on. So we're both in the same location doing today's special episode of our podcast. So guys, with our podcast, as you guys know, we like to bring folks that we can learn from, folks that we can benefit from their story, and folks that really have a cool story to share. And today we have Adam Doran, very cool story, that he's going to share with us. Adam is a former police officer turned wealth advisor in Kansas City. So, we've talked to a lot of people that have come from different backgrounds and moved into, real estate or wealth planning and other things, but we're going to really enjoy it. I think our listeners are going to enjoy it. So Adam comes to us, like I said, as a wealth advisor in Kansas City. He really loves to educate people on financial planning, on tax strategies, tax problems nobody's talking about. So Rav and I had a earlier meeting with the CPA as well, talking about tax strategy today. So I know that all of us are looking to reduce our tax liability and create a portfolio that is takes into account our tax-free wealth creation, as it were. So really interested in everything that you have to share. Welcome, Adam, to the Spur Your Wealth podcast today.
Thanks, Param. It's really fun. Really nice to be here. I'm looking forward to a fun conversation with you guys.
Awesome. Absolutely. So Adam, welcome again. Just wanted to let our listeners know that Adam and I have been connected for the last year and a half, and I love your story. So what we would like to do is give you an opportunity to introduce yourself and let our listeners know who you are, where you come from, and about your story, how you got to what you're doing today.
Yeah. Well, thanks for asking, Rav. And I would say, I grew up in the Midwest, so I've always lived in this area, but have been in Kansas City for the last little more than 20 years now. I spent the first 16 years of my career being a police officer, most of that time in Kansas City. And I got to the point where about 10 years into the career, I was just tired of living check to check. And I felt, man, with as hard as I've been working and the fact that I'm a 10-year career professional, life shouldn't be this hard, financially speaking. So I went on my own personal journey to learn about how does real wealth work, because whatever I was doing wasn't working. I attended a number of seminars. So I got started kind of down that path, learned about some common threads of here's what wealthy people do. And one of those that kept coming up was real estate. And so I started with real estate investing in 2011, 2012, did some wholesaling because I really didn't have any capital of my own, and then got into a single family rental portfolio, and over time built that up. And then because of a couple of partnerships in that didn't really work out, we ended up selling the property several years later. The timing of that worked out well because I ended up walking away from the table with more money that I'd put in. And then I had some capital. And about that time, that was 2018-ish, also was looking at changing careers. I had been through a divorce and a remarriage. So again, taking a long story, making it short here. And had the opportunity to change careers from being a police officer into being a wealth advisor and doing what I do now. And that was really inspired by just what my personal journey had looked like. And I had found that in meetings with financial advisors myself, that what wealthy people were actually doing and what I learned from the wealthy people I'd encountered in the real estate world, a lot of financial advisors really weren't aware of some of the strategies or weren't bringing up the same strategies that I was actually seeing that were actually working for people that had accumulated some level of wealth. So my goal in getting into this profession was to share with people that stuff that real wealth is really made of, versus just handing over everything you have to an advisor and paying them to manage the assets and, checking on it 30 years later and seeing if we can retire.
So I think your story resonates with a lot of people, right? In that, when you're, and it resonates with me and Rav. Like, we started our journey into real estate investing purely for our families, right? Like the same thing. We're like, hey, I'm working a corporate job. Rav was running his business. It's like, we can't keep doing this. We're tired. This can't be it, right? We just working till 65 and then figuring out after that. But so we started investing in real estate purely for our own sort of benefit and our own, families, benefit. But then we slowly came to realize, like, hey, there's power here, right? And we want to share that power with others. We want to share this, the magic of investing in real estate and all the different strategies that we've been able to deploy and give other people an opportunity. So Spur Equity wasn't even a thought, right, that we would create this private equity company that everybody can, all of our friends and family and folks in our network can use as a vehicle to build their own wealth. But because that sort of initial part of the story where you kind of step back and say, like, is this it? Like, or is there more to it? Like, how can I get financially free? That part of the story really resonates with a lot of people. And I applaud you for, not only doing that for yourself, but you're a big advocate to, like you said, like, to sharing the strategies that have worked for you, that have worked for others, for other people. And you mentioned something, and maybe you can go into a little bit more deeper and maybe some specific examples. But you're like, I love this. You said that, I believe traditional financial planning takes control away from you, and you show people how to take it back. So can you elaborate a little bit more on that? Rather than handing everything over to a financial advisor and crossing your fingers, what are some of the things that you bring to the table that, with your strategies, that you take that control back?
So like you mentioned, and I'll restate, the core thesis behind what I do and what our team does here at the office at Prevail Strategies is we just fundamentally believe traditional financial planning is broken for a few reasons. It takes control away from clients, puts them in a tax trap nobody's talking about, and holds their money hostage till they're 59 and a half, pretty much. And so we want to help give back control by showing clients strategies where you can build up buckets of money that you actually have access to, that you don't get penalized to access the money, and having a focus on building tax-free wealth so that long-term you've insulated yourself if tax rates would go up in the future, as we believe that they will. And what's nice about building up buckets of money or a pool of capital that you have access to is, in the course of your lifetime, you're going to have a handful of really good opportunities that are likely to come across the radar screen. And when those opportunities come, it's critically important that you have access to capital. And unfortunately, when it comes to leveraging banks or lenders, it tends to be the times that are most opportune to make a purchase or take advantage of an opportunity. Those also tend to be the times that lenders are least likely to want to give you the money. So just being able to have a capital strategy for yourself, focus on that tax-free aspect. And then as a part of your overall wealth plan, knowing that, and I'm not saying you shouldn't have long-term retirement assets that you maybe, tuck away and pretend you never saw it. I think that makes sense. But in addition to, and as an overlay, I think it makes a lot of sense to have a strategy for how can I have capital that I can have access to and execute on the opportunities as they come up.
Sure. I mean, we talk about diversification all the time to our clients, right? Be it in real estate or be it in any other profession. Essentially, to me, you're talking about the same thing. You're talking about diversifying where you put your allocation of the capital that you have, so that when you need access to it, the liquidity is there, and it's easier to access your own capital versus going to a lender, as you said. So yeah, thanks for sharing that. Now, I want to sort of go back into your story again. First of all, thank you for doing what you did, right? I mean, you were a cop for, you said, 10 plus years, 14 years. And so, you might have amazing stories to even share there, but basically, you weren't satisfied. What I took out of it, and you wanted to change the trajectory of your life. So you took it upon yourself to find what else is available out there for you, and not just for you, for the future of your family and for your generations to come. And so it started with you taking and making an effort, you going back to school. I think in one of the bios I read that you went to the Yale School of Management, and you have some certifications, I believe, that a lot of people don't have. And so talk to us regarding the power of education. Like, some people just discount education. I feel education is your foundation. It's something that you build upon. Just like if you're putting a house, foundation has to be strong, because if the foundation is strong, the structure will go up and you can do whatever you want to do at that point. And we feel about education the same way. Our parents, it's an immigrant story. They moved here, they made sure that we had the education so that we could do whatever we want to do with our lifestyle, right? And so talk to us a little bit about that, why did you think those certifications were necessary, and how do they differentiate from who you are, what you do today?
Yeah, that's a good question. Well, going back to when I kind of started my journey of learning how does real wealth work, the education I sought there was, I guess, more informal, because I'm going to seminars, right? Buying educational packages, as a lot of us, I think, that get into real estate, we end up doing. And, I heard something, this would have been back 2011-ish, heard something that Jim Rohn had said a long time ago. One of my favorite personal development mentors is Jim Rohn. But he really believed that for every dollar that you put into personal education, personal growth, you would get at least a $30 return, in your life out of that investment. And I thought that was really powerful. Buffett has been quoted a number of times saying the best investment you can make is that investment in yourself. And so I'm a believer in that. The seminars and the books I bought, the mentorships I purchased on the real estate front definitely helped as I was, trying to learn from the mistakes of others versus trial and error in doing the real estate investing. Then just getting into this career, and as a wealth advisor, I have pretty much been forced by my clients, really, because as I continue to, go up network in the types of clients that I work with, they bring up issues and problems that, you've got to have the knowledge set and the skill set to help with. There's a unique set of problems for somebody that's looking at selling a business. There's a unique set of problems for somebody that's about to have a $5 million windfall because they're selling the family land. When you get to, your family has reached a certain size of wealth, there starts to be considerations about how are we going to distribute this wealth? Who's it going to go to? How? When? What are the tax impacts? What about estate tax? So you get into those, and that's what caused me, Rav, to go to the Yale School of Management, get that certified private wealth advisor credential, is that speaks specifically to some of those issues. And I would just say that I think in any business, whether it's what I do or what you guys do with the commercial real estate, in any business, I think it's so critical to try to stay ahead of where things are going and what are the sets of problems that are going to be coming up that you're going to need to have the knowledge and the skill set to address.
Yeah, I think that's and we've all the things that you mentioned, I think, we're all on our different parts of the journey in sort of, managing our financial wealth and, doing it the right way. There's so many nuances, and all the things that you just mentioned are things that, both I know Rav and I have been, uh, looking at. Could you give us, our listeners, some advice as to when in their you mentioned a lot of things, right? One is, just financial planning from a investment sense, but then also like this, kind of estate planning, as it were, and where does wealth go, right? Eventually, right? And how do we set up those structures? So can you give us a little bit of advice as to when a person should, or a family should, be looking at kind of setting up these structures, or talking to somebody like you? When's the right time to actually start to put all of that together, so we have a good sense of, one, where we are today, and what our goals are eventually as a family, right? Setting those goals, and then seeing what levers can we use to get to that goal. So can you talk to us a little bit about that, and getting that, because I know a lot of folks are, and I'll just tell you from our perspective, our community perspective, like, there's business owners, there's IT professionals, there's doctors, lawyers, etc. But, like, when you're young in that journey, you don't think that you need to set that up. So talk to us a little bit about when's the right time to actually start to dive into that planning aspect of it.
That's a really good question, Param. And I think that the time to start having those conversations within your family is even before you begin. So if you're thinking of beginning a journey investing in real estate, starting a family business, or what have you, the time to start having the conversations within the family is even before you start that venture. Now, as far as when's the right time to meet with an attorney and maybe develop whether it's an overall estate plan or family wealth plan, I would also say sooner is always better. And here's why. It doesn't matter what state you live in, that state has a default plan for what's going to happen with the assets you accumulate if you don't make one. And you won't like how that plan works because it involves courts and paying lawyers a lot of money, and it involves your family's information being public. And so the only workaround to that is to actually sit down and proactively develop a family wealth plan and an estate plan, and to name who the key people are going to be, and to name where certain things will go, and how when and how. So I would say the time for that conversation is right now. If you're sitting here listening to this and you're trying to accumulate any level of wealth and you're wanting to pass that on, the time to start the conversations now.
Great. You well said. I know you're a family man, right? I believe you have a daughter. If I was, when we were talking earlier, and Param and I, we have a family, we have kids. What advice would you give to parents like us? There's a lot of our listeners, a lot of our investors who are in the same boat. They have families, they have young families that are going to high school, that are going to college. What advice would you give to those parents in regards to having these sort of conversations? What should those conversations lead to, so that our younger generation is better equipped than at least we were when we were in college and we were getting out of college at that point?
It can be difficult as a parent depending on the situation with your children, because not everyone operates the same. And just speaking from my own experience with my daughter, there have definitely been times she was more receptive or less receptive to having conversations of that nature. And I will tell you that the way that I did it, and I guess I'm blessed that things seem to have worked out well. It seems some of the information caught on because she definitely has developed some healthy financial habits. But the whole time that I was wholesaling real estate, a lot of times she would ride in the car with me and she would go through the dirty, stinky houses with me. And I don't think she enjoyed it at the time. When we had our first rental property, before we started really hiring contractors and delegating all of the workflow, we were in the houses, myself, my buddy who was the partner in the business, our spouses. And I brought my daughter along. She was 4 years old, and we had her, doing little things like fastening trim and whatnot. I don't think she necessarily enjoyed those things, but she got to see the journey as it occurred. And I tried to include her along the journey all the way, including when I changed careers, and just talking to her about the different things that I did at work during the day. Again, not sure that every single one of those conversations sunk in, but over a period of years and over time and a process, I really believe kids learn by what they see happening in front of them. Less what you're saying, more what you're doing. And so I believe that a lot of that has stuck. Maybe not 100%, but a lot of it. And so really proud of my daughter. We'll use her as an example as a teenager that's getting ready to graduate high school and kind of move on into the adult world. You know, she has savings habits. She keeps a budget. She has investments. She's looking into real estate, thinking about what kind of business she might want to establish. So that's worked for our family. I think that's a good way to pursue it versus, you know, I don't think you'll ever necessarily talk a bunch of knowledge into a kid. But if you can kind of sprinkle knowledge while they're able to join you on the journey or see what you're doing, I think that's a way to get the information across.
You know, Rav and I were smiling when you were talking about that because we've done the exact same thing, and probably not intentionally, right? You know, when we started out, but when we had our you know, when we went to go look at apartment complexes that either we manage or we're looking at buying, or potentially like we've taken the kids with us, and like you're saying, like they saw the journey, and yeah, they didn't necessarily like it. We still have discussions about some of the apartment complexes that we went through, and you know, they may not have you know, enjoyed that or whatever, but they saw like what it takes to do what we're doing, and it did you know, to your point, like it helped create conversations and a bit of financial literacy, you know, in our, and we see that in our at least our older kids, where they have that kind of mindset. They have that mindset of financial literacy, good financial habits, creating a budget, kind of thinking through, even now, like, you know, we have two kids that are going to college, and so, you know, the cost of college and university, and the value and all that stuff. So we've been having these very, you know, good conversations with them, and seeing, you know, their responses to that. It's like, oh yeah, some of the stuff that we talk about that did sink in. And so I think, you know, for Rav and I, like we started our journey kind of late, right, into real estate investing, because we were, you know, kind of focused on our corporate career and things like that. I think the biggest impact is not that, like, you know, maybe potentially one of our kids will go into entrepreneurship, or maybe even into real estate or whatever, but you know, even if they're focused on a specific career, the one thing that I think that they've taken away is that, yes, I'm going to do whatever I need to do on my career, but I also need to be focused on wealth creation, right? I also need to be focused on how do I invest? How do I, you know, what aspect of my income do I need to, you know, put towards investing into, you know, kind of the broader picture, which, you know, historically, like I didn't do that, right? I was like, hey, I got a good paycheck, and, you know, I'm living life the way I need to live it. And, you know, investing into real estate came much later. So I think they're going to come out um, ahead, right? Because they have this sort of mindset of entrepreneurship and, you know, investing and wealth creation right out of the gate, right? As soon as they start creating income. So I think that's a huge win, and goes to your point. Like, I think doing, or letting them be part of the journey, right? As opposed to, you know, telling them what to do. I think they see the fruits of our labor, I guess, you know, from a investment standpoint. So I think they're already thinking that through. And part of the, you know, and that's within family. Like, you're absolutely right. Sometimes it's hard to take advice from your parents, right? Because it's easier to see, you know, other folks, or like your friends' parents are, you know, are cooler than your parents or whatever. And sometimes, but seeing it firsthand does have a much stronger impact. And I think, but I love the fact that, you know, one of the things that Rav and I do over and beyond, you know, kind of giving exposure to our children, our families, is that, you know, podcasts like this allows a mechanism, a medium for other folks to kind of learn from folks like you, and different ways of, you know, that can be beneficial for a family, right? You know, we talk about all the different things about real estate investing and other investing, and there's so many different ways to kind of do this, but it's not a one size fit all either, right? And so, you know, different families have different circumstances. So podcasts like this where we educate folks, with folks like yourself about all the different avenues. Like, sometimes there's an aha moment that comes into some of those conversations.
So Adam, what's future looking like for you? Like, what are your goals? Are you still investing in real estate? I mean, I know as an advisor, you're advising a lot of people on the wealth side of things, but for you personally, are you looking into real estate? Are you and your partner doing some deals, or are you passively investing? Tell us a little bit about that strategy.
Yeah, I should have mentioned that probably earlier in the conversation, but I've been investing in real estate since 2011, and it was a game changer for our family's finances, our net worth, and our trajectory. As I was learning early on about how does real wealth work, there were really three keys that I saw as common threads, and I didn't necessarily do them in order, but if I could put them in order, I would say the first key is really building up over time capital and having the consistent habit of paying yourself first and accumulating that capital in whatever tax advantage way you can, and that it's liquid so you have access to money when you need it. That was the first key. The second key was building a business, starting some sort of business. It doesn't even have to be a full-time venture, but just by establishing a business, you open up more than 400 tax breaks that are not available to somebody who only has a W-2 job. And then that business allows you to scale your income. And then third, once you have more than enough money to pay your bills, plugging that excess capital into assets that produce income. So things like dividend paying stocks, real estate, business ownership interests, those types of things. And so having discovered those three principles, I'm engaged in all three of those. But yeah, I've been doing with real estate, I started with wholesaling, then the single family rental portfolio, eventually ended up selling off all of those properties, the last of which we sold in 2019. And I made a transition to being a passive investor. So since 2019, have been investing in multifamilies, a memory care facility, a development. So I enjoy it. It's a big part of our family's wealth plan. I will tell you, having lived life both as an active real estate investor and a passive real estate investor, I'm glad to let you guys do what you do, man, because I like just plugging my money in and letting the distributions come.
Yeah.
Adam, Rav and I talk about this all the time, that like we're doing this today, right? We're doing active investing and in all of our projects, and again, taking our investors for the ride. But what do I want to be when I grow up? Exactly like you. I want to be a passive investor and find folks that are doing this and just sit back and collect the distributions myself. So this is a means to an end, but the ultimate goal is exactly what you just stated, that I want to be a passive investor as well. Let somebody else who has expertise more than me, right? Where I can invest my money, and that way I can have more time with my family
Sure,
and all the
sure.
passion projects that I have. So that's exactly what we
Well,
talk
and
about.
if money is a medium, right? If a money is a medium that lets you do whatever you want to do, then you don't want to be a slave to it. And so therefore, when we talk about this, just like what you said, we talk about that, we want to be a lifestyle investor. We want to focus on what our lifestyle looks like. And that could be whatever. For, everybody has different ways of looking at things. For us, it's money is able to help us do what we want to do, even if we want to give, or if we want to travel, or if we want to educate our families, or whatever we need to do on our side. It's a medium that allows us to do that. But the lifestyle is more important than sucking in operations, because that takes a different toll. And at one day, I think we will graduate out of that, where we will focus on that. But right now, it is what we do. But that gives us joy also, and that gives us pleasure. Meeting with folks like you, people who are investing. Matter of fact, we just met with 3 investors from Austin yesterday, and we were talking about our life journey and seeing, people are busy, busy professionals. They're busy. If you're a doctor, if you're a lawyer, if you are a business owner, whatever, right? And so there's only so many things you can do in life. So be good at what you do. But at the end of the day, diversify, right? Diversify with folks like you, diversify with folks like us, and let your money travel and make you more money so you can focus on the lifestyle.
Yeah, I mean, we talk about financial freedom. That's the goal ultimately with any of the strategies that we talk about, is how can we be financially free so that we can focus on the things that are the most important. whether it's family, whether it's charitable organizations and giving and, all of that stuff. So all of the above. That's our goal. That's what I'm, define as being financially free, that I then have the ability to do all of that. Like, what I used to define as financially free was a a pretty sizable W-2 paycheck. But that's not financially free. So came to realize that that's not there's no freedom there. But anyway, so this is I think this has been a great conversation. What I'd like to do, Adam, is at the end of our podcast, each podcast we try to give some words of wisdom, some final thoughts from you. So I'd like to ask you, so for our listeners, again, they're going to be on different parts of the journey, right? They might be younger and just entering the workforce, but they're also seasoned investors and, kind of family offices, that kind of thing. So any words of wisdom from your side, and again, drawing from your own journey as well as your background now from a wealth management perspective, some final words of wisdom for our listeners today?
I think I'll spend a moment just to talk about where I think our industry maybe has its focus in the wrong place, or where investors can tend to focus and maybe it's not the right place to put all your energy. As an investor, I think one of the things we have a habit to do is try to focus on always achieving the highest rate of return possible. And we focus on that as a singular goal. And what I would say is that oftentimes, if you have a well put together plan, you have non correlated assets and multiple income streams, you can actually take a lot less risk overall, and you don't require as high a rate of return. And just controlling the downside and making sure you have assets that are non correlated, that will allow whatever assets you have to endure their normal cycles without completely wrecking the portfolio because of an event. And I'll just give you a real quick example of that. Most of our clients have at least 4, maybe 5 or more asset classes in their portfolio that are non-correlated. So you've got market instruments, you've got business ownership interests, real estate. A lot of our clients use an insurance tool that for stable, upside. And you combine all those things together. And when you have a time like what happened in 2020 during COVID in March of 2020, and the stock market totally went crazy in March of 2020, or if you go back even further to 2008 and what happened with the subprime mortgage crisis, if your entire plan is riding on one singular, like a 401k in the stock market, one single event like that can completely impact your ability to retire or have a lifestyle income. But if you have a portfolio that's spread across a number of different non-correlated assets and you're drawing income streams from more than one place, you can endure those cyclical occurrences of the different markets and the different asset classes. And you can still sleep at night knowing that you've got the other income streams, you've got the other sets of assets. And so I would just encourage those who are listening, instead of being hyper focused on a singular variable like a rate of return, have a more open and holistic approach to how can I build a coordinated group of assets that help everyone work together better. I think that's a big, big deal. And I think a lot of advisors miss it. And I think a lot of investors miss it. So that's one thing I've picked up in what I've learned in this journey.
That's fantastic. That I think that really speaks volumes. Because yeah, I mean, at the end of the day, you're managing risk also, right? And so if we can lower our risk and have a decent return and not like you said, let's focus on the high, because even highest rate of return, and we're talking about projections and evaluating projects and things like that, all of the projections are just projections at that point, right? And so if we try to manage that against the risk, and then again, we talked about diversification a lot and you just summed it up: diversification, non-correlated assets and investments across different types of instruments. That's going to be a well thought out strategy. So you don't have all your percentage of investments in, and even in real estate, like even Rav and I, we don't have all of our investments in real estate. It's spread across. So that's a fantastic piece of advice. Thank you for that.
Yeah, it's really, and I agree 100% what Param said. It is about learning from folks like you who have the knowledge, who've seen stuff, and now they've not just seen stuff themselves, go through it, but also you have the benefit of talking to so many of your clients and seeing the situation that they're in, so you're better able to give that advice to us based on what you're seeing in totality, not just through your
What
lens.
works, what doesn't, right.
So yeah, thank you for sharing that. How can our listeners reach out to you, Adam? I mean, if they want to connect with you on their own, if they have some other questions that they may have, what's the best medium, what's the best source for them to get to know you?
Yeah, the best place to connect is on LinkedIn. I'm really on there. It's not a bot, it's me. And I check those messages daily, have conversations on LinkedIn daily. So my name's Adam Doran, and I don't think there's a ton of those profiles on there, but you'll know it's me. I'm the only one in Kansas City. And that's really the best way to connect.
And I'll tell you what, that's how we connected, and that's how we started engaging. And we had discussions a couple of years ago, and we're very fortunate to have you on our show today. So thank you for coming.
Yeah, thank you for having me here. I've really enjoyed the conversation.
Yeah.
Great. Again, that's all the time we have today. Thank you again for sharing your story. Really, really appreciate it. I want to do one more plug for you. Adam's website is prevailiws.com. So if you want to reach out to him, both on LinkedIn, as he mentioned, as well as his website, you can connect with him there. Thanks again, Adam.
Thank you.
And for everyone tuning in to this episode of the Spur Your Wealth podcast, thank you for joining us. And again, we are Param Singh and Rav Singh from Spur Equity. Remember, your journey to financial freedom begins both with knowledge and action, where knowledge is power.
But action is superpower. So until next time, happy investing. Thank you for joining us on this episode of Spur Your Wealth podcast. We hope you enjoyed the valuable insights and inspiration. Don't forget to subscribe to our podcast and stay updated on future episodes filled with actionable tips and strategies.
If you want more information about our investment projects, visit us at spurequity.com. If you have an inspiring story to share and would like to be a guest on our podcast, email us at podcast@spurequity.com. Until next time, happy investing.